Hey guys, welcome back. I hope you had a really great day trading today. So today was Wednesday, August 21st, and starting in SPY, we did have a pretty fun day today. Today was kind of slow and predictable. I'm going to drop it down to the 5-minute time frame here to show the moves. We did open with a small gap up, and then we pushed up a little bit, and initially we got rejected right here at this gap, and we did get pushed down. We found our footing right here on the 5-minute 35 EMA. Didn't quite close that gap yet, but we bounced up. And when we did bounce up, we did see resistance right at the top of the bull gap. So we did push up into this island top, which is right here, right off of all-time highs. We did see that gap up right here and that gap down right here just after making all-time highs. And that up gap is where we saw resistance today. So we did get pushed back down, and let me just zoom in again here. And once we got pushed out at the top of this gap, we dropped down and we bounced on the 35 EMA on the 30-minute time frame. And then from there we did push back up, but we didn't get above any further into the bear gap. So we did close out completely the bull gap, and the bear gap remains. So this bear gap above where we filled the bull gap today is the only resistance remaining between us and making new all-time highs. And taking it over to SPX, we did see just a little bit of a difference here. When we did open, we gapped up and then we pushed up, and we did end up filling this part of the bear gap, but we never got into that bull gap at all. So in SPX, this is still an intact island top. And since SPY trades off of SPX, this is going to be the more accurate chart. So SPY did close up 0.34%. SPX closed up 0.42%. VIX closed up 2.46%, so we are back in the 16s for volatility, and in both SPY and SPX, we did close completely within the implied move. And then in QQQ, we had some similar price action here. We did open up, and when we popped up, we did take it to the top of the implied move, and there was a resistance level right here that we were unable to get above today. That goes back to right here after one of our first drops. We took a swing back up and couldn't hold it. That was at 484. So 484 was our resistance today. 485 was the top of the implied move, and you can see we didn't quite get to the top, but almost. And here we also did stay between support, which is the 35 EMA, and resistance, which is that 484 level. So we did trade back and forth between those two levels. It was one of those nice, predictable, easy trading ranges, excellent for scalping today. And QQQ did close up 0.7%. VXN also closed up 0.5%, 0.52%. And we did stay completely within the implied move here. IWM has had an interesting week so far. So let's just start with Monday. Monday we opened, where does Monday start? Right here. So Monday we pushed up and we filled a bit more of this gap right here. We filled the bull gap completely, pushed into the bear gap, and then we got pushed out. Yesterday, we dropped down back underneath the 1-hour 200 moving average. There was a gap right here from Monday's open to fill. We filled that, and then today we gapped up, and then as soon as we hit that 1-hour 200 moving average, early part of the day, that was our resistance. We dropped down to the 35 EMA and found support there, came back up, got above the 1-hour 200 moving average, and then we just kind of muddled around the bottom of this gap right here. So this gap is from two different points right here. We did break above the 211. That was a really long resistance right here, and we had two up gaps right here. So those got closed out. That second top gap got closed out on Monday. But this bear gap right here is where we are seeing a little bit of resistance, and definitely the top of that bear gap at 216 and a quarter, I actually have it at 217, should definitely be on your radar. And volatility all week has been perfect for day trading. RVX is at 24, almost 25, and 25 volatility, especially when VIX is at 25, is my favorite level. So IWM has been a lot of fun to trade. IWM again had the biggest move of the day. Yesterday it had the biggest red move. Today it had the biggest green move, up 1.3%. RVX up 3.29%, so market up, volatility up, and we did stay completely within the implied move today. I did have the top of the implied move at 216. We did close just underneath that at 215.46. So if you did sell 216, 217 spreads today, those would have paid you 100%. And DIA, we did continue our consolidation today. Monday we opened with a gap up, and then we had 3 up bars here, and then you could see early in the week we did start showing that weakness. And this weakness, the down move here in Stupid Willie, is manifesting itself as consolidation. It doesn't necessarily have to mean a move down. It just means we're consolidating back to support, which for right now is this 35 EMA. And you could see right here, it did catch us quite nicely, and we didn't bounce hard off of it, but we stayed above. So 35 EMA on the 30-minute time frame in DIA is the level to watch. And with the exception of this resistance at the top of the trading range, it was the only level in our entire trading range for the day. So DIA closed pretty flat today, 0.11%. And we are staying within the weekly implied move that we set at the beginning of the week. So that was a recap of today. Tomorrow morning we have initial jobless claims at 8:30 in pre-market. And let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications. Leave me a comment if you have any questions at all. I do try to get back to all of them, and this is not easy stuff, so I'd be more than happy to try and explain it in different ways if you're not understanding. And if you took an awesome trade because of something I said or something you learned through my channel, then don't forget about that thank you button. It helps to keep the content coming, and I really do appreciate it. So starting in SPY, tomorrow's implied move is between 556 and 565. And the 30-day average volatility is quite a bit wider, still 550 to 571. And then the implied move on Friday's contract is between 554 and 567. And to the upside, the first levels to look for is going to be this island top gap right here. This goes back to just off of all-time highs, which all-time highs are in tomorrow's trading range. And right before we made all-time highs, we had this up gap, which is right here. We did get into that a little bit today. And actually, I take that back. We filled that gap today. So in SPY, we only have the bear gap. As soon as we filled that gap, we got pushed back down. So disregard that. I will fix that before we review tomorrow, but only this down gap right here. So we have the top of that down gap is just under all-time highs, and it lines up perfectly with the top of the implied move. So 565, and then just above that we have all-time highs at 565.16. So definitely an interesting trading range. So right where that gap was, that up gap, is where we do have current resistance. So 562 is our first level of resistance, and then we have the rest of this down gap where it's very likely we will have some bears hiding in here. And then the top of the implied move on Friday's contract. And remember, we do have Jerome Powell speaking in Jackson Hole on Friday, and options are saying 567 for that. And if you're looking for a good spread idea for tomorrow, I know this is where I'm going to be looking, but in SPX, but if you're trading SPY, I would say 566, 567 spreads, because that is just right above all-time highs. And in my opinion, we will probably see all-time highs as a resistance until we get market direction on Friday. And then to the downside, we do have this 35 EMA that is going right through the bottom of the implied move. And if we zoom out just a little bit, look at this 35 EMA and look at how perfectly it has defined the uptrend ever since we got above it right here on August 8th. So we had that big spike of volatility where we bounced on that 35 EMA on the weekly contract here, and then we got back above, we had that nice volatility here, and then we had that squeeze, and the entire squeeze was above the 35 EMA. So really huge level. If we do drop underneath it, 556 is the bottom of the implied move for tomorrow. 554 is the bottom of the implied move on Friday's contract as of right now. And then underneath all of that, the next levels underneath, if you're maybe looking a few days out, we do have that 50-day moving averages right here. It was resistance last week. And then last week on Friday, we did gap over it with that consumer spending gap. So that is right underneath us as well. And we do also have that 1 hour 200 moving average in that gap. And surprisingly, that momentum is still down there as well. And also surprisingly, it's not pulling us into that as much as I thought it would. Typically, a downward facing moving average like that would give us a little bit of a downward pull, but we are at the tail end of experiencing this wild squeeze, and short covering from that has kept us almost pinned to that 35 EMA. So that is SPY. Switching over to SPX, the implied move for tomorrow over here is between 55.85 and 56.55. That is from options. The 30-day average volatility much wider, 55.15 to 57.25. So let's just see what that is. 0.58% on the implied move and 0.81% and 1.83% on the 30-day average volatility. So still a pretty solid disconnect between the two. And then on Friday's contract, we have 55.60 to 56.80. And to the upside, we still have this island top right here. I didn't quite collapse it down, but we did see a wick that took us right to the bottom of that bull gap. We did not get into the bull gap, but we did collapse up a little bit into that bear gap. And zooming out a little bit, this gap right here is just off of all-time highs. The day before we made all-time highs, we gapped up and pushed up to make those highs. The next day we gapped down, and those are the two gaps that make up this island top. And it is the last level of resistance between where we are now and all-time highs. So the top of the implied move is 56.55, all-time highs 56.69.67. Top of the implied move on Friday's contract is 56.80. So for tomorrow's contract, if you're looking for a spread idea, and this is probably where I'm going to be heading, is I'm going to look to either 56.80 as the strike that I sell, so 56.80, 56.90, or 56.70, which is just above all-time highs, and 56.80. I like a $10 wide spread, and that is just above all-time highs, and that is most likely where I will be looking tomorrow. So that is the upside, and then underneath us, that 35 EMA. That 35 EMA, again, zooming out, it is this perfect support for the entire squeeze that we've had. And if you're wondering how I get this perfectly clean setup where above the 35 EMA it's only blue candles and underneath it's red candles, I will leave a link in the pinned comment today on this tutorial. I bring it up every couple months. It's on my main page. It's always there and available. But this is just so pretty right here, how the entire squeeze was just defined by this 35 EMA. And it's just such a clean setup. If you haven't seen it yet, it's really worth watching. So that 35 EMA is just underneath us, and we're kind of pinned between that first level of resistance, that island top, and this 35 EMA. So we are looking to break out and choose a direction. If not tomorrow, then definitely Friday. And then underneath that, the bottom of the implied move is 55.85. And then the bottom of the implied move on Friday's contract, 55.60. And underneath all of that, if you're looking a few days out and looking for places that we might bounce if we do drop, we do have that 50-day moving average, and it was a resistance last week. And then we had that consumer spending report where we gapped up and pushed higher. So 50-day moving average is in that gap, and just that gap alone plus that 50-day could be a support level if we drop. So that is SPX and QQQ. The implied move over here is between 477 and 488, and that is from options. 30-day average volatility is still a lot wider, 470 to 495. Friday's contract, 475 to 490. And to the upside, we have been seeing resistance right here at this dash line, and that goes back to right here, and that is once we did have this bearish cross down on the 30-minute time frame. That first swing up after we dropped underneath that, we did see resistance at 484, and so far this week we have seen a slowdown there. So 484 is resistance, and if we get above that, the top of the implied move is 488 and 490 on Friday's contract. And at the very top of the trading range, we do have the next gap, and that is right here. And the bottom of that gap is at 488, almost 489, and the top of that gap is at 496. And in QQQ, that is not the gap that is just under all-time highs. I mean, it is, but we did have a little bit of space between that and all-time highs. In the S&P 500, it was right here above it. But in QQQ, it's a little bit higher. All-time highs are up here at 503.52. So that is the upside and some targets to look for there. We did have between the top of this gap and all-time highs, we do have one more level of resistance, and that is right here, just under 500. So be aware of that level. And then to the downside, we do have that 35 EMA. And let me just extend it out a little bit here. And so that is cutting right through the middle of the bottom of the implied move. And again here, that has defined our uptrend beautifully. And it is a very important level in tomorrow's trading range. And here again, we're kind of pinned between that 35 EMA and this level of resistance. So tomorrow, it's very possible we do stay between those two levels, but on Friday, we're gonna break out one way or the other. And then underneath that, if we do break the 35 EMA, we do have the 50-day moving average down there. Bottom of the implied move is here at 477, 475 on Friday's contract. And then underneath all of that, we do still have this wild 1 hour 200 moving average. That downward momentum has not stopped us. We've just been squeezing still, but typically a moving average that is pointing down would give a little bit pull down. So just know that that is there. And then we also have this up gap. This is the consumer spending up gap from last week. So really interesting trading range in QQQ. I feel like this one's not quite as clean as SPY and SPX, but let's see which way we break with these two levels first. And then IWM. IWM has been having some wild swings over here, and tomorrow the implied move is between 212 and 219, and IWM has been sticking pretty darn close to its implied move on a daily basis. And the 30-day average volatility quite a bit wider, 209 to 222. And then on Friday's contract, 210 to 221. And then to the upside, we do have the rest of this down gap from this huge move that we had down. We've been kind of chipping into this gap. It's been slow. We've been muddling through it, and we just have a little bit left right here. Top of that gap is just a little bit above 216. And if we do get above that, then 219 is the top of the implied move, and 221 on Friday's contract. And underneath us, we have that 1 hour 200 moving average. We have been chopping around that level. So it is an important place to look in tomorrow's trading range. Underneath that, we have the 35 EMA on the 30-minute contract, and that is underneath the 1 hour 200 moving average. We did see a little bit of support there. This was Tuesday, and then today, Wednesday. We were trading above it. And 212 is the bottom of the implied move. That kind of lines up to right here where we did see support. It is a small support, but it is a support. And then bottom of the implied move on Friday's contract is 210. And this dashed line does line up with that 211 level. And I know I said 210 is the bottom of the implied move, and that lines up with that. That's actually around 210.64. I always round down to the downside, so this is closer to 211. So this is that 211 level, and zooming out on the 5-year time frame, it's an important level because for a few years now it's been support back here in 2021, resistance starting in 2022 and 2023. This year, 2024, right here, we saw it as a resistance, and here we popped above it. We filled that bear gap that was right here. That bear gap slapped us back down to this level, and that level we have had in our trading range for the past couple days. It's right here. And then underneath that, we do have this consumer spending up gap with that 50-day moving average in it. And again, we do have a downward facing momentum moving average. It's the 30-minute 200 moving average, and that could pull us downward or at least keep us flat. All right, and then lastly, DIA. DIA has been pretty funny this week. Just a few up bars at the beginning of the week, and then just straight consolidation to the 35 EMA. This does make it a make it or break it level right here. We did see support here today, and then a little bounce back up. But if we do break that level, we could meet back up with some of these moving averages that have been kind of stagnantly moving sideways over here. And let's just take it one level at a time here. The implied move for tomorrow is between 404 and 414, and that is from options. And yes, I called it the implied move because I have been doing an implied move reading on that Friday contract. So it's not the implied move for tomorrow, it's the implied move for Friday based on today's close, and this weekly implied move is the implied move from the weekend based on last Friday's close. Both numbers are relevant, and today I don't have the 30-day average volatility on this chart. So that is what we have here, and pretty easy chart here today. We have to the upside, we have this is our resistance, and that goes back to right here, July 31st, and then we got slapped down from that level, and that is just underneath the top of the implied move, which is 414, and that is tomorrow's contract, and the weekly is 413. And underneath us we have the 35 EMA right here going right just underneath us, and then if we break that, we do have the up gap that we had Monday to start the week, and we've just kind of been sideways along that and above the 35 EMA, so we do have that underneath us. Bottom of the implied move is 404, And then within this week's implied move, we do still have this. This is the consumer credit gap with the 1 hour 200 moving average. The momentum is up, but it is up slightly. And these three moving averages together, they're kind of moving sideways. And this could be a target in the near future. It's just popping out at me right now. But there you have it, guys. All of the trading ranges and everything you could possibly want to know within them. And have fun tomorrow. Trade safe. Make sure you take profits when you're up, and I will see you